All right, well, first of all, thank everybody for showing up. I go to a lot of events all over the world, and I see a lot of familiar faces, which is wonderful. One of the great things about this event and what Gary and his team has put together is that I'm now seeing many new faces, many new wonderful conversations. And if there's anything about this conference that I kind of take away is that everybody here is like talking about business. It's not about anything else than. It's about pushing the things forward and all those things. So it's very positive, and I really, really do enjoy that and appreciate that. We have a spectacular panel here. First of all, I'd like to thank Ben Lerner, who's helped me put all this together, and I got promised a bottle of champagne if I mentioned Dasha. So I just got a bottle of champagne, so I just thought I'd do that blatantly. How's that for promotion? There we go. We do have a great panel here today. There are people who think that brokerage is and will be disintermediated. I think not. One of the great quotes that I ever received from, or great conversations I ever had, was the CEO of JLL, not the one that's here now, but the one before, that I just mentioned. And we were in ICSC in Las Vegas. And he said, look, commercial brokerage, it's what we do and it's how we do things, but it's the pipeline that creates money for everything else that we do. And I also, my friend Ellie Feingold from CBRE originally, he's, the same thing. The money's in the built environment. But at the same time, the brokerage part and what we do and how we do it, I think is very important. So let me get into this real quick. In my opinion, there's been an investment explosion and evolution, as you can see, $190 million to certain companies, of real estate tech from its initial phase of software and marketplaces, complementing the incumbents, to now a new era where tech-enabled players are going head-to-head against what I see as the sector's largest incumbents, like hotels, commercial landlords, brokerages, and are consuming massive amounts of investor capital as they scale, as we just saw. As the challengers mature into leading players, I believe that we are entering the third phase of evolution of commercial real estate technology. And that business that defines the emerging third phase of real estate technology are likely to look more, ironically, a little bit more like the earlier technology businesses in the space. And they will, again, then be more complementary than competitive to the incumbents and deriving their value proportionally to the utilization of new technologies and capabilities. This phase will likely include companies that leverage tools like sensors, virtual reality to create smarter spaces, machine learning to standardize and draw insights from industry data, and platforms to more efficiently manage transaction services, as well as design, manage, and other physical spaces. So that's kind of where I think things are and where they're going. We have three great panelists. Will you please, gentlemen, introduce yourselves and let them know who you are. Go ahead, Matt. Anybody?
Hi, my name is Matthew Cohan. I'm new with JLL. Full disclosure, I'm not a commercial real estate guy. I spent the last 4 years at Zoopla, post-IPO, just post-IPO through the sale to private equity. It was a fun ride. And what's interesting to me about comparing that journey to what I'm entering here, which is an order of magnitude larger and more complex, is that some of the things that we had to solve as we were growing as Zoopla, I see the same things in a big company like JLL that we need to solve and do things differently than we are today.
Great. My name is Nathan Gloier. I, too, am relatively new to my company, CBRE. Before that, I actually came from the financial services industry, which, of course, has some really interesting parallels to some of the disruption and what's happening in our industry today. Currently, my role is for UK and Ireland advisory services. I run technology enablement, and I also do that for valuations and property management activities across the European region.
Good afternoon, everyone. Full disclosure for me, I'm a real estate guy. I'm not a technologist, and I've been with my firm for 25 years. So you've got some variety on the panel, which hopefully will prove interesting and to create some debate. I'm head of our consultancy businesses, so the non-transactional element of the work that Knight Frank do, albeit I was a leasing agent and a broker for 20 years. So hopefully I've got a good understanding of everything the firm does. I'm head of our technology board, and I'm the commercial lead on our our digital strategy, which we are just embarking on, and I'll probably touch on a little bit later.
Sure. So Tim, let's stay with you. More than half a decade of increasing real estate values have given the startups macro tailwinds on transaction volume investors are giving them money, the landlords and the brokers invested in their business now. How has all of that affected you and your company's stance towards all things tech, and as you said, as we sit here today?
I think it's given us momentum, Duke, actually. I think the approach that we've adopted is to use this time to innovate and to really look into technology, to actually review the client offering that we provide to the wide variety of clients, and to really look at the way we use data and technology. I think it is an interesting time here. We don't want to stand still. We want to continue to move ahead. But we have a lot of challenges out there, but I see certainly a lot of the disruptors now becoming collaborators.
Yeah, I agree.
Really
And
quite quickly.
I think disruption is way overused, way overused. I'm not sure what's being disrupted other than maybe improving or whatever. So Matt, let's stay with you. Some of the industry incumbents that I mentioned before recognized that they did not want to become the blockbusters, which is, how'd you like to be a CEO of Blockbusters? Every presentation shows how bad you were as a CEO. But anyway, and the potential Netflix future in the real estate, and how that an embrace of technology would be an important to maintain relevancy. Is that just a generic statement that anyone can make in industry, or is that even true? And if so, what is the reality that we face today?
So I guess my view is the blockbuster thing is used everywhere. I was looking around at responses in the room to see if anybody seemed terrified. I think the incumbents, from what I've learned 3 months into JLL, there's no panic. I think everybody is quite aware of all the horror stories and what could or might happen, and so the response is full on. And what I see looking across our business, there's a huge amount of activity in looking at data, looking at technology, looking at services, looking at partners, and it is there's a lot of success coming out of that, but it's very disconnected and uncoordinated. So I think one of the big things that we're embarking on as well is a strategic view of how do we look at that over time, how do we focus, and I think that's one of the things that I'm going to be doing and working on for the remainder of this year, is putting a strategy, working with a team to put a strategy together for how we focus on this. I think one of the things that we have been doing for a few years now is we have a clear strategy around whether we build, partner, or buy. So we understand that. I think what we are doing is a lot of proof of concepts and trials and some partnering to see how some of these products and services work. But we are doing it without the context of that strategy to hold it together and to help steer the decisions. So, and I think it's also not about doing business as usual. We have kind of, and a lot of large corporates have a one-size-fits-all approach to product development, and I think that's one thing we're going to change up pretty quickly over the coming months and years, is how we get to market faster. To the point of the previous discussion or presentation, really focus on customer problems and understanding who our customers are and what their needs are, and coordinating our activities across the business to support that.
Yeah, and I think it's easy for all these tech companies, and I've known some of the tech companies since the dawn of time, before they even had the tech companies. It's easy to raise money and talk about all these things that you're disinterminating, which I understand, but some of the stuff's really not broken that much, in my opinion. And maybe this process and things like it, but I completely agree. So, Nathan, the success of companies like Uber, which I took on the way up, but I did take a London taxi and they're better. That's just my opinion. A business which monetizes its technology through the work of hundreds of thousands of contractors. They demonstrated the huge potential value operationally around intensive businesses powered by technology. Is there a possible correlation to commercial brokerage at all, or is the way brokerage works today suggest it needs to technology, even use technology to advance? And I just kind of said, but it's really not that broken. So what do you think?
Yeah, absolutely. So, I'll answer in terms of Uber. I'll also give a little bit more example of another tech company, and then I'll bring it back to commercial real estate. So, look, Uber absolutely does operationalize or monetize technology in an operationally intensive industry. Their foot in the door was basically replacing driver expertise with GPS and other technology. Okay, and then so that's a big key difference or a key differentiator that the black cab used to have, right? Is driver knowledge. So they've since then pried that door open and done not just taxi replacement, but healthcare, transport, food delivery, etc. And so you think about an organization like Uber that's focused on a customer problem, and how do I go and identify the needs and solve that with technology? Park that for a second. And you think then about, Amazon. It's a great example. It's everybody's favorite example. But in this particular instance, again, starting in an operationally intensive industry such as selling books, or then retail, or then providing technology services, and on and on. This is an area where they've been able to replace a bunch of operationally intensive process with technology expertise. The integration of services across all of the different offerings of a company for the sake of the customer, I think, is a really important theme. And I think that's something that we should be listening to as an industry. And certainly knowing our customer, really understanding them in the form of data, and then also being relentless about managing our agility and talent are going to be some key elements. So then how does that then come back into commercial real estate in our industry? I think some of the examples you've all seen throughout the day today, things like flex space, things like occupier experience services, smart buildings, online listings, and even online brokerage platforms. These are all foots in the door, so to speak, for getting there. And so all of that then adds up to that the only way for incumbents to prevail is to get that and to lead, not to wait for it to happen.
I agree. And that was a great answer to the question. I think the one thing that you brought up that I think anybody in this room should pay attention to a little bit more is a lot of the companies that I see coming out that are starting to help or be an advocate for the tenant or the user from that side. And I've also seen the brokerages that are completely understanding that, but I don't think they're given credit for how good they are at it. So that's kind of an interesting dynamic that's going on. So that's a great thing. So Nathan, let's stay with you. I want to ask a really tough question since I'm a broker from forever. Furthering to the point of what I see the power of the proven global platform like Uber, let's touch on a sensitive subject for all brokers, commissions and fees. Will technology reduce friction costs in real estate or relocate them? And who will be the winner in this scenario? Every broker I talk to, I don't care about tech as long as they don't take my money, that kind of thing. That's a very American thing to say. But what do you think about that?
Sure. I actually think you're going to see a bit of both. I don't mean to equivocate on that. But, one dimension I think that would illustrate this point for everybody in the room is you think about your deal size. Fee compression is all around us at all sizes, of course. But, we think about smaller deals and flex space. In some sense, the smaller firms have a much easier time going after these than the incumbents from an expense and a scale standpoint. This has really created that opportunity to come in with lower costs and healthier margins with technology plays. We've also, seen these firms make really, really great progress with low competitive resistance because, they're not having to slay big competitors. They're having to slay really small shops to get to where they're going. Then what does that mean for the larger players? As larger players invest in technology and start to gain access to things like smaller deals, the brokers are going to, on the one hand, get access to clients they may not have otherwise had, which is really helpful. And also be able to provide a differentiated experience over, let's say, a pure technology play company in that it wouldn't be digital only. They might be a hybrid, a digital and a broker experience. Also, then you go to the larger deals space. Larger deals are also seeing some fee compression, of course. And we're also seeing a lot of really high client expectations. So people are asking for things that used to be add-ons, and they're wanting them free, and they should, frankly. So really, technology investments are going to help us to meet those higher expectations with respect to, delivering on digital brokerage platforms, better workplace experiences, potentially digital advisory services, that kind of thing. And ultimately, it all leads to creating an ability to win more deals, which is a real benefit. And when executed well, it should absolutely benefit brokers.
Yeah, I agree. All right, I want to jump into something, and I'm going to throw this to you, Matt, but maybe the other two guys might want to get into this. I would like to address the subject of what I consider one of the biggest issues facing commercial real estate, and that is the sustainability of space arbitrage. In other words, is WeWork going to live or not? Can you clarify what that means to you, Matt? And will the premium consumers and businesses place on space flexibility and the natural conservatism of many landlords solidify real estate intermediation as a sustainable market? In other words, are they going to stay there? Are they going to stay there? And then the bigger question, what happens if market conditions change? And I hear that all the time. What happens when the market goes down? WeWork's going to go down, Convene's going to go down, or whomever. What do you think? Big question.
Yeah, it is a big question, and not being in the industry for too long, I don't have a really good answer to that, if I'm quite honest. I think our response to that is, at JLL is we do a lot of work with all of these businesses. We also are exploring and bringing in people to increase our capability in that market. So I think arbitrage is here to stay. It's going to exist in one form or another, but so we're pretty much covering our bets from what I can see.
Go ahead.
Yeah, if I could add a comment. I think all of us around, all the panel members are involved in serviced office space or space as a service. Certainly CBRE recently launched their product. We're looking at a similar product. We probably won't go into the stage where we'll start leasing space. We've got to adapt, and we've got to work out where we can add value to a landlord and to the space occupier. So there's that sort of center ground we're personally playing with at the moment. What I would say is that certainly our brokers are very aware that their job is going to change. In 5-10 years' time, they will do a different job, or a large part of their role will be slightly different. We launched a flexible office platform 3 years ago, and that's 3 times the size in 3 years. So that's proved to them that we can grow one business. I can see a cannibalization of some of the roles happening really quite quickly, and I think 3 to 5 years rather than 10.
Well, and I think, I don't know if it was somebody sitting right in front of me, but someone said, look, WeWork is one of our biggest customers, and they're also becoming one of our biggest competitors. So I find that very fascinating. And again, the space arbitrage thing, I think was just, in New York, I think co-working is 25% of all lease space, and WeWork is the largest leaser of space in New York completely, way past anybody else. So it's fascinating, and depending on which WeWork you go in, it's like sitting in a little mousetrap with some windows in front of you, and some of them are the pictures they show you are great. Am I banging on is anybody in WeWork in the room? Hell with them. Anyway, they are pretty good spaces, but I find that kind of fascinating. So,
could I just add a couple of comments just on London, G? I mean, you say they're big takers in New York. I think they took 9% of space in central London last year as well. So massive takers. But I think they're also adapting. I mean, they describe themselves as a technology company, not a real estate company. They might change that again in 3 months. They're very agile business.
Yeah, well, and here's what you got to love. When you're in the technology part, and I jokingly said this, when they make money, what do they want to do? They want to buy buildings and own real estate. So the CEO of WeWork has already figured it out. So he's just personally buying the stuff and then leasing it out with WeWork. So there's a little slam at Adam right there. But anyway, so Tim, let's stick with you. Moving to what brokerages are dealing with every day, and that is durability. In other words, standing the test of time and their competitive advantages. What are the services and efficiencies of scale brokerages have that will allow them to beat the new and robust tech companies and avoid the next wave of entrants? Most of all new tech companies think those two things are the advantages that they have in the first place to beat you.
I think the thing we play on constantly is people. Because we're a partnership, we put heavy weight on people and relationships that we create internally and the relationships we create with our clients, long-term trusted relationships. Now, I'd be blind to say that's going to be the ingredient for major business for the next 10, 15, 20, 30 years. What we want to do, and a sort of cornerstone of our strategy, is great people supported by great technology. So you need the perfect combination of both, to be honest. Geography, I think, is very relevant. And you know, the three panel members on the stage here all have offices globally. I think that is really important to have people on the ground. Clients need local expertise supported by great data and great technology. And we hear that all the time. And then thirdly, I think I'll go back to the collaboration point. More and more people want to work with us rather than against us. And I'd also encourage people to probably look at, you know, getting together. Customer service still needs work. Technology is great and PropTech is great, and there's some fantastic platforms out there. I think we all need to work on customer service and customer delivery, and that's something that together I think we can deliver.
I think the one thing you mentioned that I hear all the time that I don't really see enough of or the execution of is the collaboration part, which I think within commercial real estate we've always done anyway. That's kind of a natural thing that we have to do, and I think the tech companies don't get that at all. So we're getting a little bit short on time, so we got just a couple of minutes here. For all three of you guys, the last three questions. From your perspective, what is the one thing you want the audience to take away from this session today? Nathan, what's the one thing that you want them to take away?
Sure, and I might just cheat a little bit. So it's know your customer, and you're going to do that with data. And then, you know, most importantly, focus on experiences. It is about the client.
Go ahead.
I think the one line I have is innovate from a position of strength. The market is strong, fundamentals are good. Use this time to innovate and invest.
And for me, I guess it would be don't get distracted. I think there's lots of shiny objects out there. Everybody's chasing all the cool stuff, and there's going to be winners and losers in that. So I think it's focus on what areas you want to be in, and then find your partner and test and learn quickly, and bail if it doesn't work, or find another partner and move on. But don't get distracted with trying to do everything.
Yeah, and I know a lot. I've done a lot with residential technology and things like that. Commercial real estate still works. It's still a multi-trillion-dollar asset class. Anybody wants to take it out, fine, good luck with that, but a couple $100 million is not even going to get close, in my opinion. So now we're going to go to a Q&A session. Do we have some Q&A?
We have a big fat 0 questions on the app, which just proves that face-to-face is much more interesting than staring at tech. So unless you want to put a final,
no,
let's join us in thanking
Any
the
questions
panel.
there? Thank you very much. Go ahead, sorry.
Vanessa.
Wait, she got one question, go ahead. Vanessa.
If no one asks a question, that's a really bad audience. I will ask a question. What are you most worried about, or what are your challenges working with startups as such big organizations, and where do you have examples of where it's worked really well? And can you give us an example where it hasn't worked really well? Because I think we need to celebrate failures as well and be more open to that.
Can I answer the question about where it's worked really well and maybe pass the all on over? I'm going to give a plug to Charlie before and VTS. I mean, I wouldn't say they're certainly not a startup, but 4 or 5 years ago, Charlie was a leasing agent like myself, and he went into a new business and made it very successful. So we've worked together trying to adopt VTS on all our leasing platforms, on all our leasing agents across the UK. It's taken about 3 years. And it is successful. We always knew it'd be successful, but it took huge amounts of collaboration and convincing, and a lot of presentations to board members and less senior people. There are still the doubters out there, the dinosaurs who won't quite take on a fantastic platform, and we can't get to that fantastic curve that Charlie said of it being really successful. I think we're on that dotted line he showed on his last graph, because we're about to accelerate once we get everyone on that platform, and the data that we can then aggregate from everybody using it will be exponentially better.
Thank you, Vanessa. We don't want to answer your questions, Vanessa. No, I'm kidding. Listen, thank everyone for your time. Thank you very much. We appreciate it. Thank you.